Well, let's get to my guest for the day. Pete McGuire from XM joins me now to discuss the world of financial markets and trading in particular. A few charts actually that he's got his eyes on. Pete, thank you so much for your company today. Obviously, it's going to be a massive week in the next, in the week ahead. Let's get the S&P 500 chart up at the moment because I'd love for you to speak us through that right now and perhaps some of the events that we should watch in the week ahead.
Well, absolutely, and lovely to join you, Kyle. And when you're looking at the S&P, I mean, we've all been very mindful of what we've seen over the last 3 weeks or 4 weeks. It's been astounding, and Big Brother Nasdaq has had a massive move to the upside, and we're looking at a golden cross of those moving averages proof to be a bullish sign. But we're also aware, very much as you mentioned, this week is really showtime, considering 4 major announcements from as far as earnings. You've got Alphabet, Amazon, Apple, and Meta, and that will give us a good guide, plus the Fed talking Thursday morning. So, when you take all that on board, how much further will we looking? Is 4,000 achievable to hold? Will we be around that sort of number? Where's the resistance points? You're looking, that 4,100, but if we see worse than expected numbers coming from those 4 companies, Kyle, then we could see a break to the downside. We've just got to be, mindful that this week really is a very, very important week.
Yeah, it really is. It begins the year in earnest, you might say. January, well, we're at the final day of it, but it's going to soon be behind us perhaps. But let's get to a couple of currencies now, a few charts that you've had your eye on. I wanted to start with the Japanese yen because, in something of a trend channel for, a few months now, so clearly a short-term downtrend in the USD JPY. But what are you seeing here? Is it a signs of an imminent, trend break, or are we just at a kind of inflection point where, we're trying to determine who's controlling this price, the bulls or the bears?
Well, I think if we move our mind back to, say, the 20th of January last year and where it was sitting at that 115 approximately, moved all the way up to 150 for the viewers and then down to around 128. So it's been an enormous market to trade in that 53-week window. And it certainly has consolidated at this point. I mean, we're back around that 130 level. US dollars come off. It's sitting at that 102 handle for the US dollar index. And if we see further downside pressure from, the rhetoric coming from Jay Powell and so on, then I think you're going to see a softer dollar. Well, that would mean a softer dollar. And the next part, of course, is probably a strengthening of the yen further. Maybe 125 is the new handle. But there's been that much movement and profit made from it in that 1 year window, Kyle, that sometimes markets just oscillate and they run out of steam until we see new direction. And that seems to be pretty much the yen story over the last couple of weeks.
Yeah, without a doubt. And again, perhaps an inflection point with the Fed deciding policy on Thursday morning,
100%.
our time. But let's keep in that vein, shall we? Because the Euro USD is another one that has had a pretty good run higher recently, probably precipitated what has been the broader weakness in the US dollar, or the US dollar index here. What are we looking at when it comes to the Euro USD?
Well, as you can see there, I mean, many people are now saying with the chart there, you've got I'm just looking at my notes here, 1.0850. So, where we were only a couple of months ago, that October period, 90.96, it's had a dramatic move. US dollars come under huge pressure to the downside from 114 to back to 102. And in that window of, 12 or 13 weeks, it's been incredible for traders because it's just nearly been, as the chart demonstrates, one-way traffic. And I've heard many analysts saying is 115 the new high that we're going to hang our hat on. And I think that's achievable. But I just want to naturally see what the ECB are prepared to do, where the growth numbers are coming from the Eurozone, and secondly, what's happening with the Fed. And it's a point in time that the profit has been made in the last couple of months, and it's a time again to consolidate, have a look for opportunity shortly, and I think you won't be disappointed probably in the next 72 hours.
No, indeed. And that's the other thing to note, of course, is that the ECB, as well as the Bank of England, hand down policy decisions too within sort of 24 hours of the Fed. So huge from a central bank perspective. But let's get to a pair now across that. Well, we don't talk about too much, but I mean, if you are trading, say, in the European time zone, it's much more popular. It's almost like our USD, JPY, I guess you could say, but it's the Euro, Swiss franc. Tell us what's happening here, because you can often get some really interesting trade setups, a really good gauge on sentiment, as well as, a bit of a narrative play behind this as well.
Well, be mindful as far as the Swiss franc, their interest rate policies, the Swiss. Be conscious where we've seen gold move up tremendously since October. And, it's always known as very much a gold-backed currency. And when you're looking at the euro, we've seen a solid performance from it. And the chart demonstrates it from those lows that we saw all the way up. So, we, again, entering a channel, I think that there's a point in time that if we just see some form of consolidation again, looking to see where euro plays with those announcements this week, we could see it off to the races, and again a further uptrend, euro versus Swiss franc. And that's an exciting time, because naturally those traders that are located in Europe, it's a home trade sort of thing, like we have the yen or the Aussie. It's very, very hotly contested, and it's a very it's a very important trade for a lot of traders globally, that particular market.
Yeah, no, without a doubt. And sometimes too, you can always get a bit of a sense on where all those rich folks are trying to park their money. If it's ever too risky out there, you can always go, okay, well, the Swiss franc, putting them back into the vaults in the Swiss bank accounts or whatever have you. But I digress. Let's get to the next and final market we want to take a look at. Interesting tomorrow, and I know you wrote extensively on this morning in your note there, Pete,
yes,
is the Kiwi. Employment data tomorrow, obviously affected by the floods recently, still looking at, rate hikes to come. Take us through the Kiwi here.
Well, again, we've seen a big move up to the upside since October. You're now sitting at the best part of 64.5, Kyle. Are we going to see that trajectory move up? You've seen the moving averages there, and the overall consensus is New Zealand, it's having difficulty moving from that 7 handle as far as inflation. You've got, I think, the US will come under additional pressure. Kiwi, I think, will move to the upside, probably with some further rate hikes, which won't be surprising, come over the next couple of months. So I think there's further upside. Again, these markets have been incredibly dynamic over the last 3 months. And it's a point in time now that, those big moves, when you see that chart, that is nothing short of electric. From, the lows we saw in October all the way through to the highs you saw by, Christmas. It's been in a channel since then, but still, very volatile. And maybe we're going to see another breakout and move to the upside from here.
It could exactly be that. And, it would be a classic risk on play, of course, if we continue to see that. We're seeing it throughout markets across the world, although I will say ASX fading a little bit today. I'm just sort of glancing down at my screen. So we'll keep an eye out for all those dynamics as the next few days unfold. It's going to be an absolutely ripping one, of course. Hold on to your hats and, set your stops carefully, because there's going to be plenty of movement in the markets. Pete,
no shortage.
Yeah,
no
absolutely.
shortage at all, Kyle.
Absolutely, it's going to be exciting times. But really appreciate your contribution as always, Pete. Very generous with your time. Hopefully we can do it again very soon. Pete McGuire from XM there.
Thank you, Kyle.